Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Sorry, I was adjusting my seat. Wow. I'm a little bit behind, to be honest with you, because just a little bit, because I forgot to set the stream up before I ate lunch or breakfast. Oh, and kids have been playing with this with it. There. That looks a little bit better. Get this microphone in a good spot. That good? There we go. Sitting up a little bit more straight today. All right. Let's go and see what the charts have for us. There was a little bit of, more Iran tension kind of noise, but not really a whole lot coming from it. Treasuries had a pretty good recovery yesterday, but then lost it before the end of the day. And I don't know how much of that is because the S&P 500 looked really strong too. Although it looks like they both declined around the same time. So was oil going up at that time too? No, oil was just falling apart. Sell all the things day, huh? Well, gold and silver still reeling from the fifth. And just kind of finding a new area of balance, I guess. Nobody's really taken a major move there. Copper on the upside. One of the few things on our watch list that's up. Japanese yen. Okay, maybe he's calmed down. The dollar coming back. Bitcoin saw a pretty big rescue here, but not a whole lot to change the overall picture. So I don't know, man. I don't know when it's gonna happen. That's what I don't know. What I do know is that Michael Saylor should be in jail. And I hope that it happens this year. Hope that it falls apart. Happens this year. Just because it'll be so much fun to watch Bitcoin collapse when that happens. I mean, it probably won't be fun for you if you own Bitcoin. Sorry if we're on opposite ends of that trade. It's nothing personal. All right. Okay, so that puts us, the treasuries, looks like for the first 15 minutes or so, it's been pretty tight. But I'm still getting pretty decent numbers for volatility. And what do we have on the books? Well, we had trade balance at the bottom of the hour. At 10 o'clock, we get U.S. existing home sales. I don't know. That's a difficult call. It must just be from the elevated volatility from Friday. So that kind of means we've got to be on guard for stuff, doesn't it? But I think there is a possibility of some stuff happening, so I shouldn't let myself get too comfortable. I don't like that. I'm gonna still kind of zeroing in the chair here. Probably, I think I would rather have it slightly up and bring the table up to me. Or maybe I should just try and deal with it like that. And let's check the lumbar support. Neck's feeling a little bit better today. I think definitely yesterday, the whatever muscle relaxer I had taken would definitely made me overly calm. Because we had some moves yesterday. I was just like, should have been like, whoa, what? What's going on? Wow. Okay, next thing. Yeah, DNS is still having issues. That's really interesting. Down, up. My Git is not globally accessible and it's been having an issue. So I think I'm going to debug that a little bit. Unknown can't find. You know, now's a good time to clean up the folder a little bit, though, first, I think. Permission denied? How dare you? Ugh. Oh. I need Claude's help. It like started moving it, I think, and got like halfway through. Clyde will help me to ensure or to see if it was like got stuck by a partial move or something like that. Oh, let's see here. By the way, good morning, Ray. Sorry, guys, again for not setting the stream up ahead of time. I don't know why I keep forgetting to do that. Always been pretty good at that part, but that appears stuck.
Block cell.
Oh, I have the speakers on. Well, that's really curious that somebody is willing to sell 3,600 contracts out of the blue after it not really doing a whole lot of anything. I'm kind of wondering here. This shouldn't take very long. I feel like Claude has gotten a lobotomy. I'm not going to wait for you. It is open in another program. Nonsense. I suppose it could be because of my windows are open. Try that. Yes, that allows me. See, Claude, that was easy. What's the problem? What's your problem, Claude? They give you another lobotomy? Well, since that big order that came through, they sold through 03 half without much effort at all, and they're selling through 03. to change. Hmm. There. Doesn't believe me. Has to try it itself. Okay. You try it, Claude. You'll see. Oh, you know what else I should? Yeah, you can use NS lookup, but it's okay. So we were at extended session plus 1 sigma, and that's maybe why we're coming off.
Block by.
Hmm.
Block cell.
Okay. Okay. That was interesting. So a really, really big sell came through there. By the way, I'm not seeing it correlated anywhere else. It's just the 10-year treasury. There actually was a corresponding amount of buy volume in there. Basically, they bought 5,000 contracts at 03 and sold 4,700 contracts at 02 half. So, we've got a battle here. I've not seen a battle like this in a long time. Oh, wait. Is that saying that it works now? Yay, it works now. Well, if it works now, why are you trying to do stuff? That's funny. Oh, by the way, good morning, Kevin. It's picking up a repo at the high upper level? What? What happened is that okay, that's really, really bizarre. try it. Not many viewers. Oh, you know, I kind of screwed up creating this stream. So, like, usually I will, like, before I go and get breakfast, go and set the stream up, and then people come in. So I think that some people, they came in, they're like, oh, they didn't see it. I'll come back later. But people will filter in. We definitely got something interesting going on over here in the treasury zone, man. Although that volume and the way that it's behaving now kind of suggests to me that they might hang out in this area for a while. But there's definitely something happening. There's definitely some big players out there that looks like they collided. Okay, moved up. Come on, buddy. What are you going to do? Yeah. They absorbed and backticked pretty nicely there at 35. Yeah, it looks like that they did trade maybe a few contracts at 04, but then they took it offer again. So I'm not sure if I can necessarily call that absorption. But there is some fight going on there. The reason why I think it's important to note the difference there is because it was not an iceberg. Like they pushed through it. And when we're seeing the orders come through, it's like big market orders, right? I don't think I've actually seen icebergs through here. Let's see here. It's unusually fast. Yeah. It's moving around like somebody thinks there's news. Yes. And the order flow appears to be specific to the treasury. I'm not seeing a correlation anywhere. Perhaps there is a correlation with oil, but because oil's moving around a lot too, but it's being hypersensitive to oil if that's the case, because oil's not unusually active. Okay, so the problem I was dealing with last night, I got it working on the Mac, but then every time you open it up, it asks you so its solution was to just not use the keychain on Mac. Maybe that's the right thing. How do you get an Apple signed ID? Go to developerapple.com and enroll. It's $99 a year. As an individual, you can use your Apple ID. As a company, you'll need a DUNS number, and it takes a few days to verify. This is the case. There's no way to get an Apple Trusted Signing Cert without paid membership. The free Apple ID only gets you the Apple development certs for running on your own devices, not the developer ID cert needed to distribute. Oh. So, the deeper I get into this, the more I am starting to think that to do what we want to do, we're going to need more money. Because there's all sorts of fees, and so there's like some major barriers to entry. While $99 is not a huge barrier to entry. Okay, now they're clearing 04 half. The spoos are moving too here. This one makes me nervous, to be honest, guys, because it's moving up like they think that there is news. There was definitely some buying through that range, so I am tempted to buy it here in the hopes that something comes out and that we do continue to push up. But I really have no clue why they think there's something going on here. And I'm really, really weary about buying it right at extended session plus 1 sigma, because that's going to be some resistance. Like, the options aren't going to want to let you go above that. So I think that we would really need a good reason for this buying for us to continue pushing. Otherwise, the market maker is going to be like, nope, I'm going to hold this. So that explanation, though, does not explain the orders we had on both sides at 03 and this other noise that we've had. And again, the only good explanation I can think of for that is that there's a headline coming. Well, my new squawk is telling me that the House Speaker is going to be meeting with Trump later today. So, the discussion will be about Polte. So I don't think that could be related to this. So I think taking the chain out is correct. I have to disconnect from my data to test it on my Mac. So I won't do that. But what I will do is I will open up the application over here. Make sure that everything works on the Windows side correctly. Okay, there they've taken 05 bid. It is a new high. It's also beyond the dotted orange line on the inventory cost basis. So we're pushing through 2 pretty key resistance levels. And still no clear sign of what might be driving the move. I love watching it when the application starts up and you can see it building the bars. It's so cool looking. Okay, but it loads just fine. So my guys on the new squawk are being vigilant. Russian Urals oil flips to discount versus Brent in India and China for the first time in 3 months, says sources. That's a kind of headline I've not heard before, but okay. I think though that they are just trying to stay on, is something happening?
Block buy.
Okay, 5K. 5K. So, again, normally when I see 5,000, I'd be like, oh, is that an iceberg? But I didn't see any reloading behavior there. They just, a big market order came through and gobbled up all that was on offer. So somebody really, really, really wants to buy this. I don't know what that suggests if there's more, right? Because that's a lot. Somebody, he could just be filled there. He's like, here, there's liquidity. I'm just going to take it. I'm done. That sort of thing can happen, right? So we got to be really, really careful about seeing those sorts of things and thinking that it predicts the future. It does tell us something about what's going on, though. There was somebody was willing to buy some pretty big chunks. Just like there was somebody willing to sell some pretty big chunks earlier. I suppose if I were to, based on the fundamentals, take a position on the direction of the day, or let's not say based on the fundamentals, but based on the flows, I think that I would have to lean towards the upside on the theory that you're more likely to get Donald Trump coming out and talking about a deal or saying that a deal is close. than anything else. And that might explain why overall we've been getting a buy, right? Let's see here. I want to go back. Yeah, see, like the first big order was a buy at 03. And then you had a sell, push back. And then ever since then, the big orders have been buys. You can see, though, they are having a bit of trouble with 05. It's like the market maker is kind of like, nope. Task-driven development wastes 50% more tokens while making results worse? What? Well, I guess maybe I could see that if you were actually doing, like, make the tests first sort of a thing. Oh gosh, this is kind of a big deal. Do not ask your agents to do this. I now have empirical evidence that test-driven development is harmful for coding agents. What other popular skills do you want me to debug? Details about the evaluation below. Evaluation is done with Program Bench using GPT 5.5 in Codex with default settings. The only difference in the TDD variant compared to the baseline is the introduction of the test-driven development skill. The analysis is not meant as criticism to the author of the skill, but I do believe some scientific rigor is in order. This analysis brings into question whether a lot of the skills being widely shared are actually beneficial or not. I would recommend caution against blindly installing skills without substantial evidence that it helps. Otherwise, you might be burning 50% more tokens for worse results. Okay, so let's see what Reddit says. But my thinking is, when you use a skill, you're putting a lot into the context, and that tends to make your results worse. So if you were a developer doing task-driven development kind of stuff manually with the LLM, you'd probably get a better result. If you read the post, the claim is that the test agent writes biased its implementation and don't make a successful outcome more likely. That makes total sense, as they don't make a human any more likely to define big proof code when they write it either, and form the same biases in implementations. What the tests do is ensure that the previous biases are enforced when you come back to change the behavior later, and that's their value. They prevent new behavior from destroying old behavior. At least if something is wrong, it stays wrong when new behavior is added. This prevents you from having to verify the entire code base to prove the new solution does no harm. So he's saying, write the tests afterwards. that would make sense with an LLM too. That's the way that I often do it. So I build the tests afterwards, yeah. That's interesting. I think you can think of it as like, okay, LLM has like, not a memory, but like has been trained on like past workflows. So like, if you go straight into the code, you've got this workspace like this for it to draw upon. But the size of the space where you have unit tests is going to be smaller than that. So you're actually going through a smaller tunnel. Makes your results worse. Of that, I think this guy's claim might be a little bit, but he's onto something interesting. He's onto something interesting. Ask Reddit, should your partner have the same views on politics as you and why? In an ideal world, no, but in today's world, I'd say yes. You know what's a weird word? Aisle. Like, crossing the aisle in politics. Yeah, that's a weird word. AISLE. Well. They haven't taken 04 offer, but it kind of looks like they held it at 05. Which again, kind of makes you wonder, what was all the hoopla about that you wanted to come in and buy 15,000 contracts? One thing I don't like about this chair is that the back is too high. I would kind of prefer the back to be like right at my shoulders so that I can like push my shoulders into it. Try and pop them. Well, now that they've come off of that 05, the trade here looks a little bit more healthy. Can you explain what is an AI token and how do you estimate how many you will use? Yeah, so what happens is you pass into it text, right? And then it's using a text prediction algorithm. So based on the text that you give it, it is finding, using machine learning, how to split that text up into tokens. Okay. So a token generally represents a word, but they can't just say it's a single word because it gets more complex than that, right? In some situations, there are multiple words that all get compressed down to a single token. And in other instances, a token or a word could be comprised of multiple different tokens because it's a word that has subwords in it, for instance, right? So that's why they use the term token. And the thing is that it could be like a really, really long word with a lot of letters in it, still compresses down into a single token, right? So you can't just one-to-one compare the size of the text file to the number of tokens that come out, essentially, right? But then estimating how many tokens you'll use is a much more complicated thing because, you know, that has a lot more to do with what your what model you're using and what you ask it to do and things like that. The more complex of a thing you do, the more tokens you're going to use, right? And you tend to start getting a really, really good feel for how many tokens in a day you can use. A little bit more volume coming in here on the open. Sounds like that a lot of the indexes are coming in sell side. Well, the S&P 500 is buy. But then the NASDAQ, the Dow, and the Magnificent Seven are sell. Oh, now that's really, really interesting. So that their Magnificent Seven market on open imbalances, basically it's all sell. There's not hardly any buy at all. So it seems that maybe those tech stocks are still struggling. It depends on if you give it minimum and maximum look back for the context. Yeah. So when it comes to using LLMs, I think that the biggest trick is that the longer the session goes on, the worse the LLM tends to perform. Just to warn you. Is the cost based on what you input or based on the amount of processing? It's both. It's basically the total number of tokens that get used through the whole request. So the more words you have in your original prompt, that uses more tokens, and then every little bit of thinking that it does, because the way that these work under the covers is they're basically like looking up. They're doing that text prediction on like logic. Like this is the way that people tend to think, and it thinks things through. So it will go through multiple rounds of that thinking, and that all uses tokens, and that's how you get into hundreds of thousands of tokens. Like if you were to, they kind of hide this stuff from you now because that would give some insight into how the LLMs work. That is a little bit of their secret sauce. But if you were to be able to go in and see it like you could in the very beginning, it's like pages and pages. Like the logic would take you hours to read. Not sure how companies can properly budget for this expense. Yeah, well, and here's the thing, is that I really don't think that you can go in and you can say, okay, this is how many tokens we expect our engineers are going to use this year, and set aside that amount of money for it, and yada, yada, yada. That doesn't make sense. Because it's really going to be like, people are going to use as many tokens as you give them, right? So it makes, if I was a company, I think that it would make much more sense for me to say, here's a budget that is reasonable for my engineers on a daily basis, and then hold them to that. And if they use, they use too many tokens that day, then they're out of tokens and they can't keep going. That's the way that it is with the subscription-based plans, is you can keep going until you run out of tokens, and then you have to wait 12 hours or whatever it is. And for one thing, that will cause you to think about how you pose things. Like, you will answer questions for the LLM that you know you can answer ahead of time. and structure things in a way to avoid the LLM going off track as much as possible and wasting tokens on things that were dead ends, right? So by putting the restriction on, people use the LLM better. And the thing that I think is really wild is that you really don't have to give them that much. I mean, like $5 to $10 a day would be more than enough for most people. But you can find these people that are using like $1,000 in a day. How are they doing that? They set up these multi-agent frameworks that like have like 5 different agents all doing things, and that uses a lot more tokens because each one of them are doing that kind of logic thinking stuff, right? And they're all doing it at the same time, and then you're running that forever, and you're giving it a big project and a ton of leeway about how to do it, and then you have to tell it to fix all of these different things, and it uses a lot of tokens, and that's where you can get these people that can use thousands in tokens in a day. Even when I'm using the bigger model, struggle to even use $5 to $10. Right? So that's what's going on. So that companies and one of the issues that you're going to see, and I really feel like that this is kind of like just human nature. Maybe it's human nature, maybe it's our culture, but we have this tendency to want to force and control things, right? So you get these CEOs and they hear, oh, large language models, it's the next big thing in order for our company to survive, let alone be at the top of our industry in the next generation. We have to figure out AI. So I am going to come in, we're going to buy this product, we're going to tell the engineers they have to use it. We're going to judge them based on how many tokens they, how extensively they're using it. And we're going to put a leaderboard to show who's using the most tokens and all of these sorts of things, right? That is a bunch of perverse systems set up to try and force a particular outcome that you want, right? Before you even really understand how things even work. What should you do? Let it develop naturally. Give the engineers access to the tool. Don't give them unlimited access, but give them a generous amount. And let them come up with their own ways of using it. Don't make this decision that's like, we want the ones that are using the most tokens or the least tokens or any of that sort of stuff. Just let them figure it out. And a new ecosystem is developing where you develop around AI stuff. And there's going to be a lot of false starts. You've seen this thing where, like, over the past 2 or 3 years, the number of iPhone applications has increased exponentially. And yet the number of, like, well-liked applications has gone down. So people are generating a lot of stuff that nobody wants, which is kind of interesting. Well, I think that result actually makes sense to me, because why should I care about somebody else's application at this point if I can just vibe code it myself, right? For a lot of things, that's going to be the case, unless it's a bigger thing, like a game, or I think a trading platform is something where, like, all of the little decisions that you've made in that, having a unified, like, API framework way of doing things, just like in a game, that's like a set of game rules that is set. You're all playing that same set of game rules, right? And then there's value in people sharing that same feature set, right? That's still a moat. I think that will still be a moat. And there's a lot of other use cases that are kind of like general things where, like, people would rather make their own and have the software adapted to them, right? But we're figuring it out. We're figuring it out, and it will take years, probably maybe even a decade or two. And I think that the companies that kind of just let it develop naturally are going to be the ones that find the most effective ways of utilizing it. And the ones that are trying to force people into doing things are going to continue to have these false starts, like we saw with the whole Uber thing. Right? Now, at the same time, the AI companies are heavily subsidizing the token cost. So chances are the expenses will go up. And hopefully over time, our compute capacity increases and kind of accounts for that. But with the current trajectory of things, there's a really solid chance that the cost becomes too high and there's a pretty major bear market in AI stuff. In fact, I'm going to bet you that at some point there will be a time where it's like, if you use AI at all, the company doesn't want you, or, they'll say like no AI code at all. That might happen. Or I don't think that the majority of people will do that, but you'll probably like see stories in the news. That's a story I think you'll see in the news, is this company has banned all AI code. I think that's something that's going to happen. But then the majority of people will continue to use it and they will just get better at it, and it'll just be just like the .com bust, right? Got too frothy, the bubble got popped, they had to completely recover. And then when it came back, the internet was bigger and stronger than any of the most lofty estimations during the .com bubble, right? It was just those particular companies went kaput because it was all nonsense. And then when we put some reality in the market, that allowed for good solutions to come about. I guess they need to get everyone hooked before raising prices. Well, they're already like Anthropic and OpenAI are already kind of having problems, right? They've been doing things like throttling their models. You will come in some days, I tell you what, man, where it's like, oh, Claude is getting too popular, and they lobotomize him. He's just not as smart all of a sudden. They 100% do that. They basically say, like, we don't have as much compute available, so you can't use as much. You can't think as hard. Totally happens. The question is, will the time come where there's a price increase so much that it just like completely collapses the thing? Like Anthropic and OpenAI basically go out of business, sort of a thing. I'm skeptical about that one. So far, I think that things are going to where, there will be some friction there, but that ultimately would get past it. I'd also add that I think in order to get a bubble pop the size of the .com bubble, that it would need to be accompanied by a larger financial crisis. Like this thing with Iran not going away and the high oil prices really shocking the economy could definitely be the thing that could do it, though. Right? Not AI on its own, but AI combined with the geopolitical uncertainty and the higher price of oil and the tariffs. I kind of think, like, from an economic perspective, I think, yeah, tariffs are a tool that you need to use sometimes. Because, like, objectively, they hurt you. They really do. You're basically putting a cap on, you're basically hurting your own supply to some extent. Okay, but there's some bad things about not having any tariffs either. You just gotta kind of do have to protect yourself. So it's a negative thing that you kind of have to do and like most countries do. But having like the tariffs and the shutdown and the war with Iran and all of these things all at once, like you can only push us so far, man, you know? So they've been ranging around the 05 for quite a bit. The S&P 500 on the open here appears to be taking the upside. They've still got a ways to go before they come into like the next volatility level I've got listed at 74.88. But well within the realm of possibilities, I think. To the people who post, I haven't written a single line of code in 6 months. What's plan B? I keep reading people posting here about we're cooked, we're riding out this wave, and time to upskill. To the people around here who are 27 to 35, what actually is your backup plan? I'm struggling to understand how so many here are cheering on their own obsolescence. Well, somebody has to tell the AI what to do. The thing that I'm seeing at my job is I feel that I have only become more valuable to the business from using AI, not less. You know, maybe there's other developers that could do it, but there's like not more developers that can do it because you still have to have this prerequisite skills and knowledge. So I don't think it's actually increasing competition for that job. And the job is becoming more efficient. So it's just like, it's just a better job. It's not. Maybe there's a point where that flips around and then they lay everybody off and that'll really suck. There has been a lot of layoffs. That's also another thing. I haven't written code in 6 months. I have read a lot of incorrect code and poor implementations produced by Claude Opus in response to fairly detailed prompts and have told it what it did wrong and what it should do instead. Yeah. I actually don't get the it does it wrong as often anymore. But that's because I feel that I've gotten really good at telling it what it needs to do. So that it basically it's about understanding where are the key decision points and anticipating them so that it doesn't go down. And especially if you understand, I think maybe this is a thing that's like I'm good at because my mind naturally goes that way, whereas most people don't. Because I'm always looking for like the contrary thing. I'm always looking for what is everybody saying that I know is incorrect? What is the way that people typically do it that different from what I need to do, essentially, right? And I think that that's a really important skill with LLMs because you're going to have a certain use case, right? And then the LLM's going to go, oh, it's just like this common use case that's out there. But no, you have to tell it, actually, but we're going to be different from that in these ways. You anticipate those branches off, right? Working with a project manager directly, bro still has no idea how to get Claude to do things in our legacy system and no clue how to get Claude to figure it out from scratch and no will to learn. He's too busy doing a full-time job to learn how to babysit an AI on top of it. I get the okay, so here's another thing that I hear people talk about. Oh, we did make a new high there, didn't we? Wow. Wow, the S&P is really going. We're going to finally get a headline here. Then we're going to say the treasury, somebody in the treasury's new. Maybe not. Maybe downticked. I don't know. Something that I hear a lot of people starting to say is like, I loved writing code and now all I do is prompt an LLM and I hate that. But I don't hate that. The only thing that I hate is having to wait for a response, right? Because I just want to continue to go in the loop and work and work and work and work and work. And so if the AI was like, you know, maybe in the future, maybe 30 years from now, we'll be like that. And we'll be like, remember when you could wait like 30 minutes for Claude to give you an answer to something, you know, the work that it was doing? And in the future, it'll just be boom, done, right? Then you look at it. You're just spending that whole time in the loop. And I find that the AI... Okay, hold on. Okay, so White House source is saying that talks regarding preventing Iran from acquiring a nuclear weapon are going well. So that's the headline. That could be the reason why people were buying. I think that there's a pretty good chance that that's why people were buying. That seems like a pretty weak headline to me, though. So I don't know if I want to buy it after the headlines come out, right? So yeah, the way that you decide to prompt it and the way that you decide to use it makes a big difference to how your experience is. Because if you're still trying to think and you're learning and you're telling it, well, I still need to understand everything that's going on, it's just this constant loop of building and learning, and it's the greatest thing ever. For somebody like me, I absolutely love it. Whereas if you say, the AI is going to do everything and I'm going to use as little brain power as possible, and you try and pass it all off onto the LLM, you're going to be miserable. And probably you're not going to develop your skills as much, and you're not going to have as much demand for your skills in the future. My thinking. Okay. Hi, how are you? My question is, what is the future of day trading? That's a good question. So I think in the near-term future, you've got two major things happening right now. The first is that the pattern day trading rule going away is going to open up a lot more retail traders for going into individual stocks. So you may start to see bigger moves based on news and chasing and these sorts of zany things. You're probably going to see a larger amount of money wielded by retail traders in the stock trading space, and that's going to change them. That's going to change those markets. And it may result in them becoming more like the futures markets, honestly, where there's really thick liquidity and it's kind of hard to find edge because people have already already found all of the edges and boom, right? Taking them out of the market already. The other thing is that because people have large language models, they're able to put together more sophisticated quant trading strategies. So I also think that you're going to start to see retail traders, use those more sophisticated strategies. And there are certain things that quant firms do right now that probably won't be viable in 5 years. So I think that the short term is probably like what we will consider the golden age of quant trading. And as everybody kind of gets into it and figures it out, it will decline. That might even mean retail traders starting to discover some of the things that like kept Renaissance Capital running and some of these other deep secrets, right? Might start to become more common knowledge, which would be a really interesting thing. I also think that since the biggest edge that we have found in our study is the realization that the markets are mostly about flows now because everything is done through index investing and things like that, there may come a point at which people are able to predict what the index funds are going to do so effectively before they do it that it really increases the costs on the index fund and makes index funds less viable. That's something that I could see happening in the next 10 years. That would be a really, really curious development. Because everything that I know about a dynamic system suggests that something like that can't go on forever. And eventually there will come a point at which the transaction costs for that increase so much that index fund investing isn't as attractive as it was. And you'll have more people going into, oh, actually, I need to manage myself. Okay. But as those kind of things happen, I always try and look 2 or 3 steps ahead, right? So what are the next 2 or 3 steps ahead? Well, I think that the first one is going to be that there's going to need to be greater access to markets for funding. So right now, the number of people vibe coding an app out there is just exploded. So that means that the number of people out there with some startup idea that need funding for a startup is going to increase. And the amount of venture capital that's available there to them is not necessarily changing. So they're going to have to find a new market to raise those funds. So I think at some point you're going to see some degree of micro investing, making it so that people can go and give other people on the internet equity in exchange for money on a small scale. So a lot of laws and stuff will have to change for that to happen, right? They're going to have to get rid of some of the rules around, like you have to be an accredited investor and all of these sorts of things. So they're kind of moving towards that by making a test. So I could see a website in the future where it's like, if you've taken that test, then you can register on this website and then you can be a micro investor in all of these deals that come along. And then every day there's a new thing that comes out and you can choose to invest in it or not. And you can even invest small amounts, right? There's already people out there trying to do this sort of a thing, but it really hasn't taken off. At some point, I think that it's going to have to, in order to have the funding, right? So then you will see a lot of trading going into that, or maybe we wouldn't call it trading per se, but because a lot of that is more investing, but they probably will provide trading opportunities too. So I think micro investing is kind of the next step after that, right? And this also kind of suggests that, again, because the quant space is going to accelerate so quickly, like it's going to be even harder to do quant stuff. Like right now, you kind of have to go through a university education to really be good at that stuff. You really do. But as these methods become better understood by retail traders and things like that, it might not be like that in 10 years, right? So that means that if you're still trading in the market, the sorts of things that we talk about, which is like, what do you know about the market that is not necessarily priced into the current price and that not everybody knows, that can give you an advantage? That sort of stuff is going to become more and more important, right? I also think you will probably see things like AI agents investing and managing money. And that could be a weird place. A place where most people don't really directly interact with the markets anymore. They only interact with large language models, and the large language models interact with the market for you. And that could allow mass integration with the market on a wide scale, which could really, really change the economy. So, yeah. I mean, the stats doesn't change. 90% of traders still losing like they were in the past 10 to 12 years ago. Well, so that's a different thing now. Okay. So when you look at the nature of a zero-sum game like day trading is, you are going to have some amount of people lose. They just have to lose for the game to work. And in a really like a winner take all system, you know, you're going to have the majority of people fail. Okay. But when you start to get into like some of the statistics and stuff, just by randomness and the spread and all of that, about 60% of people will fail after a year if they were to just take one trade a day, right? And then after 5 years, it's down to like 15%. Only 15% of people can win, right? Okay. But the statistics that we have are like 95% of traders, right? How is that possible? How is that possible? Well, I'll tell you how. Almost everything that retail traders are trying to do doesn't work. They have either been, I want to say snookered. Is that the right word? They've basically been fooled into trading strategies that never had any edge to begin with, or they've taken strategies that have already been taken out of the market and that they don't understand very well. So most of retail trading is a cargo cult. You heard of cargo cults, right? We're going to talk about this all the time on the stream, but if you're new, maybe you haven't heard of a cargo cult. So during World War II, the U.S. military had these bases on all of these islands, and the locals saw what the military was doing, and they would get care packages, and then the locals would get some of the stuff from those care packages and stuff, and so it was a great thing. And then the military left, and they didn't get the drops anymore. And so the locals said, oh, it's because they're not doing the things that the military was doing that caused the gods to come and drop the drop packages. So these guys, they go and create these giant effigies out of straw and sticks of like a radar tower and all of these sorts of things. And they perform the drills that the military was performing in anticipation that the gods will see that behavior and send the care packages. And of course that never happens because they don't understand what the military was actually doing, that it wasn't just an object shaped like a radar array. It has to be built out of metal and have all of these electronics in it, that they're communicating with somebody across the ocean to send the care package, and it doesn't come from the gods, right? So it's a complete misunderstanding on the natives' part about what the military was doing, because they simply don't have enough knowledge and context to even understand what the military was doing. And that's the vast majority of retail traders. So you come in and all you know is how to look at a chart and identify patterns on a chart. And that's not really how professionals function. So even when you get people that talk to a professional and understand a little bit about what the professional is doing, they don't have the context to be able to understand what they're being told well enough to teach other people. This is where I have an advantage in the creator space, is because I worked for a bank. I've done a lot of the empirical research and understand the way that those strategies work pretty well. So I can explain them to you in a way that's like, I know what you're missing and the places where you tend to misinterpret things, and can set you on the right track so that you can learn to actually be a radio operator like it would be with the cargo cults, right? One of the biggest ones is that all of the really successful traders in the 80s were making money from what we call a momentum strategy, where you come in and you're buying stocks that are moving up or whatever, or they're moving to sell stocks that are moving down, and you don't win every time, but when you do win, you win so big because you caught the whole move that it makes up for all of the losses, right? But where retail traders tend to go wrong with this is that this is something where you had to hold it for months. So it's not a day trading strategy, and you have to watch a variety of assets. You can't just sit and watch one asset. So when you hear retail traders and they say, oh, I'm trading momentum, but they're a day trader and they only trade SPOOs, they only trade S&P 500 mini futures, they don't know what they're talking about. They don't actually understand what momentum is, and they're not actually trading momentum. They're trying to scout with concepts from momentum that they don't really understand. It's a cargo cult. And that is why the failure rate for retail traders is so much higher than it should be. Because most retail traders are just doing things that objectively won't work. That you can go and you can back test them and you can see that there's no edge, if not negative edge in them. I think trading will become more accessible to retail. Trading is becoming 24/7. The market will be more liquid and there'll be more opportunity. Supposedly, but I don't know. I think that what happens in that situation is that there's just more noise, and the noise actually makes it harder to day trade. One of the things that's really nice about the 10-year treasury, trading the 10-year treasury for day trading, is that there's less noise. You don't get as much of this. It just moved because for no reason. When they start to trend, like, there's a good reason that they're trending. Even bull flags on the daily look like things you see in time series momentum. What were you talking? Oh, because you said a lot of things while I was ranting that. Then yeah. Understanding the market that you trade intimately, not treating all markets the same. This will be the edges. A lot of algorithmic and quantitative parts treat all markets the same. Maybe. I kind of wondered that, how much they adjust to each instrument. It's kind of a curious question. Negative sum after commissions and taxes. Regarding my stylized fax points, order book imbalances in large tickers versus small tickers as an example. Also, overnight drift in indexes compared to commodities, or how different periods of yield curve sweep differently on large orders. Oh, now I have not heard about that. Different periods of the yield curve sweep differently on large orders? Probably. Because they have different amounts of liquidity. In a very hard way, after 2 years off of struggle learning day trading, my biggest fear is because of AI or anything like that, that my edge will be gone. I think that your biggest fear should be that you actually were just getting lucky and that there's not any actual edge to what you're doing. Sorry. So let me tell you something. When you go into the stats, remember I said earlier, if you just take one trade a day and you do that for a year, you have like a 40% chance of coming out profitable after that, right? It's not actually, you know what? Let me do this. How can I find it? I don't even know what it was. Hold on. Somebody liked it yesterday. I was rewatching the video and I couldn't. Oh, here it is. Okay, that was long. It's right here.
Voice news disconnected.
Turn him off for a second.
Profitable strategy that I found. We made what? So check out this profitable strategy that I found. We made what? $7,000 almost? That's pretty good. Wouldn't you like to trade that? Well, today's your lucky day because I'm going to show you exactly how it works, code and everything. Okay, so at the beginning of the day, I use a random number generator to pick a time and direction to take the trade. And then when that time comes, I get into the position and hold it for 30 minutes. In other words, the strategy is completely random. But wait, there are some interesting things we can do with this. So I can use NinjaTrader's optimization feature and optimize on the seed that I pass into the random number generator, and I can run the strategy 1,000 different times. And then I can right click on these results and export them. And then I'm going to import it into R. A lot of the times you'd use Python for this sort of thing, but it's really, really fast to do a quick graph like this in R. Import the data, look at the net profit, and you get something like this. After a year, you have some people that blow out because they hit the $10,000 starting account amount. But actually, if you look at it, about 40% of people are actually profitable after a year. Okay, so what if we ran it for 5 years? Now all of a sudden, almost everybody has blown their account and hardly anybody is actually still profitable. And why did I pick 5 years? Well, because that is an industry standard. If I start a commodities trading pool, I have to show you 5 years of results or the total result history if I don't have 5 years. So remember that strategy at the beginning and how much it made over 1 year. So what happens if you look at it over 5 years? So next time you see somebody that says that they've been profitable for a year or 2 years, just realize they were probably lucky. So check out this.
Yeah. So until you've had 5 years, I wouldn't call yourself a profitable trader. That's my standard. I've never had somebody come and tell me, oh, I've been doing it for 5 years. I've made money every year for the past 5 years and then shown me those results. I've never seen that. There's a lot of people out there on YouTube claiming to be profitable and showing really impressive results. And then it's really curious that it's like, oh, it's only 1 year's worth of data. Or they had multiple accounts. So why did they switch accounts? And all of these sorts of things. 5 years. 5 years is generally what it takes to validate an edge. And why is that? Well, number one, because you have to have enough trades. So remember, you got to remember that the market has fat tails, right? So there's going to be this one day that is just like really, really bad for your, or maybe like 1 quarter or whatever, that's just really bad for your strategy. And how much does your strategy lose during that period, right? And if you only take 1 trade a day, right, then that's only like 250 trades over the course of a year. That's, with fat tails, that's not enough. Because remember, the fat tail is, those are rare. So you have to have a large enough data set for those fat tails to show up. That's why you need like thousands of trades. You need thousands of trades. And then the other issue is that when you get into like kind of more of a scalping strategy, it's something where you're taking multiple trades a day, it increases the fat tails. Because what a lot of people do, a lot of people, is they will have a much larger stop than their target. They're looking for this teensy weensy little profit, and it can go way against them. And with the S&P 500, wiggling around so much, the amount that you're looking for is less than the amount of wiggle. So it's very, very likely that you're going to get that triggered, and very unlikely that your stop is going to get hit unless you just objectively take the wrong direction or whatever, right? And so it seems to work because you're going to win most of the time. Well, when the fat tail comes along, it destroys you, right? And I've found that there's a lot of people can get away with that for a year or two. Now, if you're doing something like I have equal risk reward, or my winners are larger than my average winner is larger than my average loser. Granted, you might have to do some things in the stats like take out outliers and things like that. But if your average winner is larger than your average loser and you still have a really high win rate, then that's maybe a different thing, right? The better that those things are, the less samples that you necessarily need in order to prove it. But even then, nobody's going to invest in a fund started by you unless you have 5 years, right? Oh, so he did say, I trade only Bitcoin. Okay, so there's your first problem. Because Bitcoin does weird things, right? 2 months, 860 trades, 696 winners with an average 1-to-1. Okay, well, so if you're hitting 696, and your risk reward really is 1-to-1, that's pretty good. That's pretty good. Also, the Erdos Renalon longest run is something to keep in mind. The larger the data set, the largest the losing streak can be. Those are the left tails. Basically, it grows logarithmically with it. Yeah. Something that I think is really bizarre is that in almost every back test I've ever done, I'll come in and I'll do like a back test on 5 years. And somewhere within that 5-year period, there will be a period where I have 11 to 20 losers in a row. And that's even with like a good win rate. So like, how is it possible? Because when you go and you look at the statistics of like, based on your win rate, what is the possibility of a streak of this much and that sort of a thing, right? Like the probabilities of those happening is like infinitesimally small, like less than 1%. And yet I see it in every back test. Almost as though algorithms are constantly trying all the different algos out there, finding which ones are profitable, and then targeting those in periods when they need liquidity. That's my theory about what's going on there. Yeah, isn't it enough sample size? No. So for something that you're doing that much, and I don't know how big of a, again, like the smaller of a trade it is, the more data you need, generally speaking. I would want to see thousands or tens of thousands of trades in my back test before I would really feel confident like taking that strategy live. Oh man, while I've been yapping, the S&P 500 took a turn for the worse. And oh my God. Wow. Right exactly where I said it would too. Huh? Does Seth know what he's talking about? This sort of a thing to me is just so funny that nobody in the retail space is talking about these levels, and it hits it on the nose practically every day. Practically every day. Like I've always wondered, okay, if you're going to use a line and say this line may possibly provide support or resistance, or maybe you say there will be some sort of reaction at this line. How do you statistically measure how effective that line is? How do you say, well, this line, it goes and it bounces off of it exactly every time. And this one, or maybe you could say this one, it doesn't bounce off of it every time, but when it does it exactly. Versus, well, this one, it's a little bit more of a fuzzy region, but it does it almost every day, right? And there must be some statistical way of like putting that into a score to say this line is better than that line. And then you could come in and you could compare them and you could say, okay, this is like previous day's high and low. This is pivot points based on yesterday's range, etc., etc., etc. And there could be some level where we could say if a line has a score above this, there's actually maybe some edge to it, right? But I don't know if it's really even worth putting the effort into, because it is so clear that these levels based on the options are a big deal in the market that it almost seems stupid to trade without it. It's, like you can very, very clearly see that it matters. And we know that there are periods when it will break it, right? When the market outperforms volatility. So it's like when it fails, we understand really well what's going on there and why and stuff. So, man, this is such a good level, and it's crazy to me that I even pointed it out, didn't I? I said 74.88. I think that the high was 74.90, 74.91. So you got to give it a little bit of room, but once they cross that line, it's just they couldn't handle it, and now it's turned into a real bender of a down. Well, how much are we? I think that there's still positive. Okay, 0.1. 0.08%. So there was still some amount of gain in the overnight session that we've got. Yeah. Well, those volatility levels being based on volatility, it does treat non-stationarity. And there's no retail traders I've seen talk about this. Yeah. It's really, I mean, I probably shouldn't talk about it so much, right? Because there's some real edge there for us. I mean, I don't think that it was really a worthwhile trade here in the treasuries, and there was a lot of weird things that happened, but it did it in the treasury too. Here's the treasury. And as soon as they got to that first line, they couldn't stay above it. Now, it was a little bit more complicated because we did get this. Right? But like if we came in here and we took it the first time, we would have made 1, 2, 3, 4 ticks. 4 ticks possibly. And then this one I wouldn't. But I don't think that it was actually as much of a worthwhile trade. But just goes to show that like it's pretty consistent across instruments too. Like, oh, the Treasury does it, ES does it, the dollar index does it. Look at the dollar index there, bouncing off of that standard or extended session -2 sigma, almost exactly. Wild. By the way, why is this so, oh, I see, because the gray line doesn't count. I was trying to figure out why it was scaling it the way that it does, because I have it set to scale to whatever the next level is, but it doesn't count the gray lines, which are the opens. The only issue I think with this particular indicator is that you get regular session lines and extended session lines, and sometimes it's hard to tell which one is going to bounce off. Like here in the S&P 500, you might have argued, oh, it's totally going to go to the 96. It's totally going to go to the next, the regular session +1 sigma. And it didn't make it to it. So I haven't found any way to tell, like, you should use this one or this one. You put them both on there and you can kind of get the intuition, I guess. I think some traders use multiple ladders to watch what's going on in major correlated markets to match their context. Yes, that's exactly what we're doing here in the treasuries. I want to see all of them, because especially in the treasuries, you have to watch for a large portion of the flow are spreads. So you kind of need to have them next to each other and see if there's spread activity and which way it's going and discount that in the flows. Okay, Andre, regarding the data set for a reliable number in trading, there is a time-wise part because of non-stationarity, and there is a quantitative sample size needed. 5 years cover more regime. Yeah, you're right. And I was totally going that direction, and then I got ADHD and got distracted, right? So the first thing is that with the kurtosis involved, you need like thousands or tens of thousands of trades. If you're doing the sort of thing where like you have super high win rates, then that tends to create kurtosis in your results. So you need tens of thousands. And I just kind of came to these numbers based on intuition. I think that there's some studies and stuff that kind of show this, but I've had many strategies where like I did the back test on a month, and then I did it on a year and it looked great. And then I did it on 5 years and it didn't look great. Because once I had 10,000 trades, then you can see the full curve or whatever, right? But then the other thing is that you go through different market regimes. So like here, this one talking about 2 months, 860 trades. Well, we've seen Bitcoin take a huge plunge in the recent past. So you might have something that takes advantage of those really, really well. Will it do as well in a bull market? Will it do as well in a market that's going sideways? You know, and you have to have a different variety of financial conditions. Unless you have some way of representing those financial conditions and changing your strategy based on them. And then, but then you'd have to have the 5 years to show that it's adjusting correctly, right? So the 5 years gives you a wide, it's pretty hard to find a 5 year period that doesn't have one of those big declines in it in particular. Because that's one of the things that will really get people is you get retail trader that just happens to lean towards taking longs. So if you come in and you mostly take longs in the S&P 500, eventually it's going to work out for you, right? And when you're going through a bull market, like it will seem like you just can't lose. And then the bear market will come and you just get destroyed, right? But 5 years is usually enough to give you one of those periods. You can read Bailey and Lopez paper from 2014 on deflated Sharpe ratio, or Lowe's paper from 2002 on standard error of the Sharpe ratio for more info on. Oh, no, this deflated Sharpe ratio is a term I've heard before. But somebody was saying there was they were using there's different versions of the Sharpe ratio that people feel are better measures of how good a strategy is. For an average between 1 to 5 trades a day, I would say a minimum of 1,000 trades over a 5 year time frame, depending on skew and kurtosis. Yeah. And then again, Bitcoin has this tendency to be like, when it's in a mania, it just does nothing but go up, and when it's in a bear market, it does nothing but goes down. And so you can really overfit your algorithm in Bitcoin. So that's kind of a problem. So it's totally the biggest fear should be that you just got lucky. And then the second biggest fear should be that the edge is going to go away. Yeah. You know, that's an interesting thing that I don't bring up when we talk about discretionary versus systematic trading, right? Well, there's a lot more edge available in discretionary trading, because you're basically looking at every little piece of information that's not correctly factored into the market as a potential source of edge. The problem is that the market is not obligated to go along with that edge. If that's not being priced in right now, then what makes you think it's going to be priced in 5 minutes from now, right? So a discretionary edge by its nature is not going to be as reliable versus a systematic edge. Very, very, very hard to find, but much more reliable. Much more reliable. But then you do get this thing that the market still changes and you have to change your algorithm. And you've got the one algorithm, you get to the point where like that stops working. And then you have to start from square one. And if it takes you like 10 years to find one good algorithm, and then you run that for a year and it stops working, eek, you know? And then, you know, you're at square one. Versus you're a discretionary trader, you're constantly evolving with the market. You're constantly learning more and figuring out what the flows are and everything and getting better. And so when the market changes, you might even anticipate that change before it happens. So advantage discretionary trading. Not that I poo-poo on systematic trading. I mean, if you found one, you've found one. You should take advantage of it, right? Well, on the S&P 500, was that first low enough? It may have been. So basically, we've already kind of reached a point at which if I had a short, I would kind of have to think about taking it off, and I'm not quite sure what it's going to do from here. And the treasuries, they're still on the higher end of the range. They certainly came back off of that 07 though. And I would say, well, except for that we made a decent move in the overnight. So I would say that we're performing about on par with the volatility. It's just that all of the volatility was in the overnight session, and now in our session, it's hardly doing much of anything. In a systematic approach, most of the time you got to let your losers go to the end and not interfere with it. In a discretionary edge, risk management is one of the first rules. Yeah, well, and you can combine them. Okay, so like here's the thing that's a rant coming on. This is a new idea that I'm still developing. Okay, but first let's go back to the cargo cult thing, right? One of the reasons why retail traders focus so much on risk management is because all of the turtle traders and all of those guys from that time period told us that the real edge is in the risk management. And if you actually understand a momentum strategy, then that comment makes complete sense. If you don't actually understand the strategy, you don't have any of the context, you come out with completely the wrong answer. And I honestly think that some of these guys, some of these momentum traders were like messing with people. They would say things and kind of laugh to themselves knowing that people would misinterpret it, right? Even though it was technically correct. So what is the risk management portion of it? Well, if I come in here and I see that the Japanese yen is going down, and so I short the Japanese yen, and then I also see that the 10-year treasury is going down, so I short the 10-year treasury, well, then what I've done is I've doubled my exposure to two assets that are highly correlated. So you have to come in and do these things wherein the mixture of positions that you have as little correlation to each other as possible. This is often why a lot of momentum traders and stuff really like assets like cocoa, because they can be completely disconnected from everything else, right? So in addition to reducing the correlations, you also have to come in and ask yourself questions like, what's actually going on in that market? So, okay, we're moving down, but... well, this would be a bad example. We could go back a couple months ago when the treasuries were moving up and we'd say, okay, the treasuries are moving up, but there's this Iran thing is taking off and there's this thing and there's this thing that could increase yields, right? And so it turned down. And so might not have been the best idea to jump on board the long at that time, understanding the risks that are involved, right? Okay, so that's managing risk for a momentum portfolio. Now, but what do retail traders do? Retail traders come in and they say, well, my portfolio is $1,000, and so I can only risk 1%, so I'm going to make or lose $10 on a trade. And that means that because I'm trading micro treasury yield futures, I'm going to have winners that are 10 ticks and I'm going to have losers that are 10 ticks. And I'm just going to, whatever those, I'm just going to take my position and then I'm going to have a target at 10 and a stop at 10. And I hold to that. I don't move my stop. I don't change any of these things. I don't change my entry condition, right? And that's a retail trader's conception of risk management, which is way too simple compared to what we were just talking about, right? But not only that, but there's issues with that. If you're just taking straight stops and targets, then basically your results become at the mercy of volatility, and your results will mostly just resemble volatility. And so what you will find if you do a back test is that the larger your stop is, the more money you tend to make. And that if you have set stops and targets, it's incredibly difficult to generate a strategy that actually has like real edge and really makes money. Because the number of things out there where you really have a solid percentage chance of getting your target before the stop, right, are very few. And especially that can be found from a statistical edge. They're just very, very hard to find. So you're basically shoving your strategy into something that will make it just reflect the statistics of volatility. So you want to have some situations where you catch a trade and it just keeps going and going and going and going, and you can hold it. And you want to have some situations where you take a loss and you just take it immediately, and so you cut the loss really, really short because you can see that immediately that it's not doing what it's supposed to, right? Okay, so how do you manage that? What actually is risk management? Well, I think that the idea of risk management makes a lot more sense when you think about it in terms of flows. Because that's what we're doing, right? So we're coming in and every day and we're saying, okay, what do I know that might cause a certain type of flow? Well, it's the beginning of the month. We have a CPI tomorrow that might dampen volatility. But we had that Friday move that was kind of increased the volatility of the market. You're still seeing stuff kind of come in through that. So we might see some fireworks, but still be relatively constrained. That's what we saw. Does that suggest a trade in that situation? No. But in another situation, you might say, hey, this is the end of the month. So we're going to see this flow and we're going to see this flow. And we've got an auction today and you've got this piece of news, right? So now you can come down and you can say, okay, on the balance, I can see an imbalance towards the upside, so I want to buy. But what are the risks? What are the risks? Well, there's a risk that Donald Trump could come out and say something. Well, if Donald Trump comes out and says something, it's probably going to be good for a deal and good for the markets and for the treasuries. So if I'm long, that's okay. But there's also the risk of further military action. So that's a risk that I have to, and what flows would come in. And if that flow were to come in, how many orders would come in, right? And how would that change my equation? Would we, because maybe it is, you can have some situations, this happens all the time, by the way. This is a really, really good one that we've taken advantage of, is there's a passive flow coming into the market because of momentum and end of month buying and things like that. So you expect the treasuries to be up. But what's one of the risks? One of the risks is that there is a economic number at 10 o'clock Eastern time. And if that economic number is bad, then that could cause a selling flow to come in. Yes, but how much selling? And then I do the math and I find out, yeah, even if that sell flow comes through, I'm still okay. We still have a net buy-in balance, so I still want to be long, right? Or maybe it's just not worth being in at all to avoid the economic news or whatever it is, right? So going through and looking at what are all the flows, including flows that you might not necessarily know about, right? Like you got to think about all of the risks and then decide when you're going to take trades and when you're not, based on the risks, based on the predictions about the flows and the things that you do and don't know about the flows. See now how you have like a real sophisticated risk framework to work from there? There's a lot you can do with that. I see no psychological thing in this, as a lot of dummies say 80% in psychology. My POV, psychology only matters on sizing. $1,000 spread on 5 assets from the same market is not a portfolio. You unfortunately, and people need to understand this, go in multiple markets if you want to go the portfolio way. Well, I don't know. I mean, if you're doing like long-term investing in stocks, 5 assets, I think you would probably want more like $10,000 spread across 5 assets. But 5 stocks, that's a decently diversified portfolio. That's a really great way to start. Because honestly, it's hard to track more than 10 stocks. Once you get beyond 10 stocks, unless you're like doing it full time and you've got a team, you just don't know everything that's going on in that stock. I find it really hard, like, you know, I wasn't as aware of these things when I worked for the bank in tracking their stock. And now that I work for a tech company, I'm kind of more aware of them. Like, there are things that you will know working in a tech company that you're not going to know as a regular person. And you really have to do your legwork to really be informed. So that's why I would put between 5 and 10. But that's on stocks. I don't know. If you're doing a momentum portfolio, well, you might have 5 assets at a time, but your universe, the universe of things that you're potentially going to trade in is going to be huge, as big as possible, right? And as uncorrelated as possible. And if you've got 5 assets, yeah, they can't all, I think I see what you're saying. They can't all be in the same market. Yeah. They can't all be correlated. They need to be completely different. That's why it's like you can have one thing that, because really when you think about it, the Japanese yen and the dollar and the 10-year treasury and gold and to some extent Bitcoin are all correlated to some degree. If I was going to do momentum sort of stuff, I think that I would have to start paying a lot more attention to like corn and soybeans and cattle and, you know, things that are a completely different market. So now you're no longer part of a cargo cult. You kind of understand a little bit. I've given you guys more than enough to be able to go in and do your own research. Come back tomorrow with more questions. And even if I'm like totally not paying attention, Andre will probably answer him because he's been pretty good today. Thank you. Oh man. I'm a little nervous about CPI tomorrow, by the way. So it's one of the things that's been going through my head is, oh man, what if that next inflation number is really bad? Because I think I still have those memories from when the Biden administration was like, there's no inflation, it's fine, everything's fine. And then we come out and we get these numbers that were like spot 8 or whatever. And then I'd go on, oh my gosh, you know what? I shouldn't have thought about that because this really pisses me off. This really pisses me off when we came in and we had inflation prints that were like spot 8, spot 9, something like that. And then I go on TikTok and everybody on TikTok is trying to tell us, no, it's totally fine. This is just perfectly no, that is not normal. Spot 2 is normal. Spot 9, I had literally never seen that up to that point. That was real inflation. Everybody trying to tell us it was nothing. Oh, it makes me so mad. It was literally just people that had no clue about the economics, pushing the political line that they were told to by the politicians. Very, very nasty. But that's the thing that really irks me in general these days. Yeah. Oh, by the way, where did I put my window? I should move that back. it seems to me that you get less pushback from the official determined narrative now. You noticed that? I kind of thought, well, it's Donald Trump. They're always going to push back against that, and people are going to be vigilant. But it really feels to me like that mainstream media has, in some ways, tightened their grip. Because I've seen so many things here in Utah that are like subjects I know a little bit about. I know what's going on, and I see what the news reports, and I'm like, oh, that's not what's happening. That's not what's happening. I told you about this the other day, right? Kevin O'Leary, they made a deal to build the data center, but then people had, started getting mad. So or rather, this is the media line that you're being told. So the politicians got cold feet and renegotiated the deal. And so now it's only half of the footprint. Okay. Bullshit. That's not what happened. That's not what happened. What happened was the first phase of the project was going to be 2,000 square acres. And after that change, the first phase of the project is going to be 2,000 square acres still. Didn't change what the initial phase of the project was going to be at all. And when they decide to go in for like phase 2, 3, 4, 5, whatever, they can just apply for new permits. And by that point, they'll already have the data center going. Everybody that lives in that area will be working at the data center, so they'll all have a vested interest in seeing the data center grow. Yeah, it didn't change anything. And everybody in Utah, I see all these people, like liberals on my Facebook and stuff like that, like celebrating, yay, we won, we bullied them out of it. No, you didn't. He played you. In fact, knowing Kevin O'Leary, he probably knew from the get-go that they weren't going to build it that big. And he always had that in his back top pocket, like, well, but if people push against it and everything here, we can kind of give up some. And it sounds like we're giving something up when we were always planning on doing this anyways. And nobody questions it. What's with that? There's always these savvy enough people to see through that one in the past. And I don't see anybody pushing back against it. Well, I suppose that's more edge for a retail trader that's really paying attention, huh? For Kevin, it's like a poker game. He won it sometime, many times in the past. Yeah. I tell you what, that guy is he loves business. It's interesting hearing him talk about like when he worked at Apple, for instance, because he worked with Steve Jobs. And you know the thing that I think is kind of sad about it is that Kevin is like I'm gonna be the most environmentally friendly person about it, right? Like I think that anybody else that would come and build a data center in Utah would not be as friendly to the environment as Kevin O'Leary was. You actually think the data center gives so much jobs? Well, no. So it's going to be about 1,500 jobs. It's going to be about 1,500 jobs. But relative to the people that live in that area, that's like everybody that lives in that area. So yeah, when it comes time for like the next phase, the majority of the population will be in favor of building the data center. Because not only will practically everybody there be working at the data center, but I think that AI will become more entrenched. So I think you'll have an easier time of it 5 to 10 years from now. Of the total population of Utah, it's like a drop in the bucket. But for that, the area immediately surrounding, even when you get into like Brigham City, let's see here. You're talking about 1,500 jobs where the nearest city that's about 15, 20 minutes away is 20,000 people. Okay. So yeah, you're talking about all of the sudden an increase of 20% of people, right? And that's a population that's large enough that then everything else starts to shift around to serve that population that has the money, right? So yeah, it's gonna flip. It's gonna flip that area and Brigham City's entire economy on its head. So much so that I don't think you're gonna find very many people, if at all, willing to oppose the data center, at least locals. You know, people from Salt Lake that, they'll bust them in from Salt Lake, but you won't find very many locals that will be opposed to it then. You do realize that no. So there's the construction jobs. Those are temporary. But the understanding is that when the data center is finished, it's about 1,500 people. Wait, I'll come back to this and argue with you in a year or two when people are crying about the sonic weapons and brown water. I don't know. Well, okay, so like, here's the thing. I think that there's the data centers are becoming a proxy for this larger fear about AI replacing everybody's jobs and things like that. And I think that, number one, that's wrong. It's not going to replace everybody's jobs. But number two, I think that it's like internally inconsistent. If you're concerned about becoming a part of the permanent underclass, the best thing that could possibly happen to you is for them to build a data center down the road that you can work at. Because those are going to be the only places generating money anymore. That's where the money's going to be, is working at the data in that world, in that theoretical world. The permanent overclass are going to be people that work at OpenAI or Anthropic or a data center. You will be like the data center workers will probably not be as rich as Anthropic and OpenAI. They'll be more like the bourgeoisie. Right? You want them to build that there. You want them to. Where's the money going in the economy right now? Data centers. So you would rather them build the data center or not. And if it doesn't work out, then yeah, there's going to be a recession. So I was saying yesterday, there's some people, they want to have a data center moratorium. Like 40 to 60% of all capital expenditure by corporations in the United States over the past year have gone into data center. So if all of a sudden that investment is made worthless by a moratorium and all of their investments go down the drain, that would be an instant recession. It's a lot of money going into it, right? And yeah, if there's something happens wherein like all of a sudden the collapse or the demand for AI collapses or something like that, you could have some difficult years in that. But number one, I'm not convinced it's going to play out that way. I think that you're going to have some real shifts, but I don't think that the demand for AI is just going to disappear. It's too useful. People can even just running a local LLM is valuable, really, really effective and useful. So, yeah, people are going to want it. The demand isn't going to completely collapse. There's just going to probably have to be like a period of like a realignment, if you will, right? And then after that, they'll grow. So I think working at a data center is probably a good career trajectory right now. I wonder how long they'll start running it mostly remote. Well, could you run a data center like almost completely remote? I don't know. I think that either way that you look at it, that there's going to be more jobs at a data center than in other places in an economy where AI automates everything. I saw the Primeagen making this argument the other day that I thought was an interesting way of approaching it, which is like, okay, so if you come in and you look at all of the programmers and you say, well, you can automate their job. Well, if you can automate all of the programmers' jobs, why can't you automate the manager's job? And if you can if you can automate the middle manager's job, then maybe you can automate the top level manager's job. And if you can automate that, then maybe you can automate the C-suite. And at that point, there's not even a C-suite or anything. There's just the company, the investors, and everything is run by AI. And the only people that are making money from it are the investors. Like, how does that work? How would that work? Nobody would have work. It's kind of, unless the whole economy is just based on investments at that point. Eek. I don't know. Well, at that point, then it doesn't matter. At that point, then it doesn't matter, right? But it's kind of hard to draw that scenario and look at the end result of that and say that that's the way that it's going to be. Because there's some things in there that don't really make sense. You can't just automate everybody away. How does that make sense? It doesn't make sense. Let's see here. I'm new here. Let me know if there's any guidelines. We're pretty, all, what is the word? Laissez-faire, I guess, about it. Yeah. But I tell you, here's the thing that people will screw up, right? Especially when you're coming into like a community that's as small and tight as this one is, you have to approach it like a child. You know what I mean? Like I know nothing. These other people, they know everything. I'm going to sit and participate and drink from every portion of the culture until I really understand what's going on. And then once I understand what's going on, then I can come in and be like, oh, well, okay, I'm going to take this piece and not this piece. And it's okay to do this and not that, right? Because where you kind of understand what's going on, right? Because I think that the mistake that a lot of people make is, oh, I know trading. And the reality is most retail traders don't know jack shit. And so when we start talking about the empirical data, the studies, the things that we can actually prove, you're going to be completely lost. And it's going to contradict a lot of things. So going back to this thing they were talking about earlier, why is the failure rate for retail traders so high? And I said, well, the failure rate should be high, but it's higher than it should be, probably because the things that retail traders are trying to do just don't work. So we've been misinformed. So then you have to ask, well, why do we get so misinformed? Seth says that there's empirical data out there. Like there's real science about this. So why don't retail traders know about it? Maybe part of it is it's hard to understand. Like it's graduate level math, and you kind of have to understand this whole volume of work before it makes sense. So it's a lot of things that you have to understand in order to kind of see how they connect together and why it matters. That's like 2 semesters worth of learning if you were doing it at a university, I think. But I still don't think that explains it. I would think that even under those circumstances, because there's plenty of people that are doing like quant stuff, statistics and everything, and you're still kind of just not, they're even seeing some kids try and put it on social media, talk about it. He still doesn't seem to match up what's going on there. Well, I think it's because the conclusions are very unsavory. What you actually learn kind of says something about the world that it directly contradicts what we've been told about how our society works, and kind of sounds kind of awful. Like, for this to work, there has to be a large number of people out there trading that just don't actually have a clue what's going on, because there has to be noise. There has to be noise, and without the noise, the people with the money that the markets actually exist for wouldn't be able to transact. That's not the way that we want to think about it. Once you've accepted it, I think that you actually find it kind of freeing. It actually kind of says, we're actually not bound by anything. You can make it what you want it to. And ultimately, to push society into the next stage, we need to make good decisions. And you have all of the ability to go in and make the decisions that you want. So there is a light at the end of the tunnel. There is a light at the end of the tunnel, but the initial thing is like, oh, fuck no. People hear that and they're like, there's no way that can be true. I can't possibly believe that. So they never actually learn the science. Relatively new but humble and patient and good about following rules as far as doing okay with mouse and keyboard, but I have a background in C++, so C, so I'm interested in automation. Very good. Well, so I use NinjaTrader, and I really feel like using NinjaTrader with C# is, at least at current world, the easiest way to kind of get started doing automation and stuff. And one of the reasons why I say that is if you want to day trade, you really have to factor in the order flows. And NinjaTrader gives you access to the order flow like no other platform does. Like no other platform, except for the platform that I'm building right now. I don't know. I kind of wonder these things, like it seems that it is easier to teach mathematicians how to program than it is programmers how to do statistics. But it also seems like it's more likely for the programmer to learn statistics than it is for the statistician to learn how to program well. I don't know what is with that. So I kind of feel like if you come into this and you already have programming skills, like that's a big leg up. So a lot of people are not able to figure that stuff out. Or they program, but it's like at the most base level, you know? Did I hear the... Hold on. I thought I heard the door, and then my stepdaughter is like, Seth, can you open the door? We're like all still in our pajamas. And I opened the door, and my wife is just standing there. So I guess she got locked out somehow. I don't think that Asher is awake yet, is he? Well, that would be a good thing if he's awake. That'd be a good thing. Because I kind of felt like it was hard to get him to go to sleep last night. He is awake. He's awake. So she went outside. So funny. I mean, this keeps happening. Dude, if you... No. Not your rooms, like outside. Like, she went out the front door to pick up a package, and then Asher locked the door behind her. Yeah. And he keeps doing this. He keeps doing this. I don't know if he understands or if it's just funny, or, you know, like if I don't know if he understands that he's locking you out and the problem that it causes, or if he just doesn't understand how serious it is. Yeah. So we have this thing. Oh man, I don't want to think about it, but you know, when he gets bigger, because we have hotel locks on all of the doors so that he doesn't just walk outside. What are we gonna do when he's old enough to unlock those? I don't know if he'll ever be to a place where I feel comfortable with him being outside by himself. I could be wrong, but I saw this video the other day that was like on a subreddit that's like WTF, like what is this? And somebody's driving down the road, and it's one of those cameras that kind of like has the infrared instead, but it's like a vehicle camera, right? And there's some goblin looking creature in the road doing something weird in the road, and they just turn around it like they're too freaked out. 100% that was an autistic child. I was like, oh my gosh, that video made me so upset, because I was like, that was an autistic child, and you didn't realize that nobody realized that he was out in the middle of the night just dancing in the street. Oh my gosh, so dangerous. And then people run into him and don't realize that that's what's going on, and doing something about it. Oh. I may just build a whole new. I really hope. My dream is we build our trading platform, because it really looks like we're gonna have to turn it into a real company to make it happen. I don't think that I can just like bootstrap it and release it the way that we've released the indicators and stuff like that, because the exchanges require certain dues and things like that. So we're gonna have to turn it into a full business. So the hope is turn that into a business. I become a millionaire from that. I move to a different house where we can build it specifically for him, so that we can have locks that he can't open. I don't know how you do that, because there's laws against like locking the house from the inside, so you can't get out. But jeez. I guess part of it is just like the room. You have the room or where he is locked, so that he can't. So you don't have to worry about the front door. But are you finding this month's price action so far? Well, we got a really good trade on Friday. I would say that the treasuries are still a little tricky, but we're starting to see some. I wouldn't even say that there aren't opportunities there. It's a little bit new order flows that I'm still figuring out in my mind. But so far this week we've been able to call them pretty good. I should probably start taking more trades. I had a neighbor whose daughter was autistic, and she would just walk into my house and hang out for a while. Wow. Illegal, safe ways to do it. Who knows if it would work, but try to have an emergency only route, but then that might just become the route. Yeah. I mean the issue that I see is that he's like right on the edge of like extremely autistic, but smart enough for it to be a problem. Like he can talk with the AAC device. He can communicate. He wants to go to the store and buy Legos all the time. All the time. The most autistic thing ever for Legos, right? Oh man. But I'm really skeptical at this point of he would ever be able to live on his own. That's why I'm kind of like, I don't think I'm about to tell you like something that's like some of my deepest, darkest thoughts, right? Okay, but I don't think that I can live the rest of my life just working a desk job and doing slightly better than most people and feeling confident that everybody will be taken care of. I think that I have to make millions of dollars and leave a foundation that kind of like in Rain Man, you know, like all of the money goes to him, and the brothers and sisters will be able to use it, but only if they're taking care of him at their houses or whatever the deal is. And so I think we got to build a trading platform and make a company out of it, which is a huge undertaking, but I feel like I don't have any other choice. Like, that is, if it's going to happen, that's the way it is going to happen. I have to do it. Anyways, platform is going well. I got it working on Mac last night. A couple of little problems, so I fixed that. We'll test it here in a second, and then yeah, and then we'll get the we have this. I totally pulled it down, but this chart right here is our platform, so it's pretty good, smooth and quick. And I'm kind of taking care of some of the things so that you could give it to other people to try it, and trying to bring on new data platforms and things like that before I go super, super deep into the indicators. There's this issue where you can be licensed for display only. And if you're going to give it to where algorithms can process it, you maybe fall under a different umbrella. And I don't know how other platforms deal with that. That might explain why we don't see as much stuff with order flow, for instance. I might make it that you can't do the custom stuff on stocks. I don't know. There's all this legalese that I'm kind of unclear where the boundary is. I might need help from a compliance person, a lawyer. But then it increases the amount of money, and so I'm kind of what am I going to do here? Oh, yeah, I've been planning on including Data Bendo. I haven't gotten around to it. Right now, I've got Rhythmic, and I'm trying to onboard the X feed. So, and it sounds like the TX feed is very doable, and it's going to happen soon. Oh, man, as funny as I'm just talking about that, I get disconnected from Rhythmic. That's fun. Well, anyways, I'm well past time. I got to get going, guys. I will see you tomorrow.